Hi members, hope you are well. Beautiful day here in Stratford upon Avon. I just want to do a quick update on the price action charts using order blocks and high liquidity zones because I know some of you are doing really well with this and I'm really pleased. It's so satisfying to see you doing well. Makes it all worthwhile in the end. So let me just take a few things off. Let's take this off here. So all I've done is stripped down the price action charts into order blocks and high liquidity zones using the settings that you already have. You've already got the settings, so don't change those. These are really important settings. Special settings, no standard stuff here. Now I have the 30-minute chart on the left and I have a 10-minute just to clarify what is going on in the markets. So let's go through this. Now, before you do your analysis, you know that these order blocks are there already. So we've got the yellow zone here on the left. Let's highlight that. Here is the sell zone. Here is the buy zone. So that's already there. There's the sell zone there. There's the buy zone there. So how do we use this if you want to be a price action kind of a guy? I like the trends. Personally, I love the trends because when they move big. We hold on to positions for several weeks as we've experienced in the last few weeks and done very well. However, this is a different way of trading, and not different, but certainly a way of trading if you prefer it, and some people do, some people don't. So let's see what happens here, and I'll show you the pound yen, which we were talking about in the room this morning. So the base or demand area is already established from Thursday, and then the price bounces off it. So at whatever time there, you see a bounce. Now you can, if you have premium, jump into the volume candles. Takes a bit of time. There we go. So these are volume candles. So we can see that there's a rejection here and there's a rejection here. Okay, so right on the money from the previous low. The price doesn't like it there at 23.53. Don't forget to move it a little bit higher because the price, what tends to happen, it just flicks over it and then it moves back up. So if you had it, for instance, at 23.51 in the middle there, using these candles in particular, I'll show you the Heikin-Ashi in a minute, using these candles, then of course you are not going to get in, you need to be live. So as an example, if you put a pending order here, you wouldn't have been triggered. If you put a pending order just above here, that would have been triggered. Very easy to set. So a long position just below the support line, stop just below the support line, and you could take it to the next level, can't you, there? Okay, so we can see now clearly that the price, it has a problem here at 23.79, and there is a resistance or supply zone here with high liquidity. So you could put a pending order here in the middle. You could put a pending order here at 23.77 and then go short there, stop just above the support area and then down to here, or go for 2 for 1. So a very straightforward way to trade. Now let's just convert this to Heikin-Ashi because I know that not everybody has premium, so that's fine, you don't need premium. But here is slightly different. As you can see, the middle of this price here now on the Heikin-Ashi charts is 23.55 is the middle of that band, and of course you'd have your stop just below that. So as an example, you would have got in the middle there, 23.55 with a 37 pip stop and a 215 pip target to the top of that range, or just below that would be a safer play, wouldn't it? Now in the Heikin-Ashi realm, we can see that that previous trade on the live candles probably won't work as well, so you could get in just below that with just price above there. So as the price comes back into this supply zone, then the price is highly likely to react to the downside. Now we've got core inflation data coming out later, so that will have a major impact. So anything can happen, but this is just a good example of how to use the charts. Move my big ugly head out of the way. And so let's go over this in a 10-minute chart frame if you want to have a look at this. The first thing is, once the price moves out from this area, it often comes back in. So there's an opportunity to get into that right there on the 10-minute chart, 23.55 roughly, and the price moves up. This doesn't mean to say you have to beat your chart all day. As Michael says, he just analyzes for 30 minutes, puts some alerts on, and then, you know, trades when they hit those kind of prices, and has a look at the chart to see whether there's any reaction. Then you can make your own mind up. Let's have a look at the pound yen just as an example. There we go. Okay. Gosh. All right. So here we go. Price action charts on the 30-minute chart without live charts. So go to the volume candles, see what's going on here. Price does exactly the same. Moves off support, demand, and then moves up, moves back down. And the reason why these settings are really important, and you'll know this once you know the settings, is this is a really important area of resistance. Because of the settings that we've got, we don't need to do any calculations. This is the 10-minute chart. Squeeze this up a bit so we can see, and you can see exactly what's going on here. The price is being rejected at these areas several times, and then the price moves up, and you can bank whatever that is. All right, so it's a little lesson there on using the supply and demand areas within a shorter time frame to grab 30 to 50 pips, something like that. Sometimes more, of course, but let's go back to gold just to clarify if you fancy that. So generally it's the sellers are in on gold. Let's get rid of that. Let's get rid of that. So we're waiting for the data, and so therefore there's nothing going on. There's no point looking at the charts, but I just thought I'd do this little lesson on using this chart setup using volume candles or using Heikin Ashi. It doesn't make much difference, but for me, if I was doing this, I would be Heikin Ashi, and if I see that the price, I would set an alert here somewhere around this area. As soon as I get the alert, I'll jump onto the charts, and mine might go down to here. Say, is there a rejection candle? Yeah, this is a bullish candle. Everything's starting to go green, so therefore that is a good place to get in. Here's a good place to get in as well. So into the yellow zone, the sell zone, a rejection candle clearly seen here. And so therefore the price is highly likely to go back down to 23.53 and beyond. I did mention beyond because we expected it to go 23.30 or even 23.00. Might take a week or so, might take a few days, we don't know. We'll have to wait and see. Hopefully you find that useful.